Hey everyone, welcome to the KE Report, a company update from Snowline Gold. More of a recap of 2024 and a slight look ahead to 2025, where the company was very busy in 2024. Some of the key highlights being an initial resource estimate at that valley zone or that valley deposit, completing over 35,000 meters of drilling, as well as a couple other key points. All of this being highlighted in the most recent news release that came out on New Year's Eve, December 31st. I am chatting with Scott Berdahl, CEO of Snowline Gold. Snowline is traded on the TSX Venture Exchange under the symbol SGD and on the OTCQB under the symbol SNWGF. So, Scott, thanks for joining me early on in the year to more recap what happened in 2024. You and I chatted throughout the year, highlighting news release by news release, especially drill results. But it's always good at the end of the year, the beginning of the year, to more or less recap what the company did. Let's start off with that initial mineral resource estimate. That news release has a number of good charts and tables that further explain this resource. But look, it was an initial resource that came out at over 7 million ounces in the indicated and inferred. Scott, just remind everybody about this initial mineral resource estimate at that valley deposit, please.
Yeah, that was obviously a big milestone in the year for us to get something on the paper of what we actually have instead of just, drill highlight after drill highlight. And so that was exciting. And it was really fast. We had drilled the first holes into Valley in September 2021, just 4 holes, 800 meters or so. So it was really just 2022 and 2023. We drilled throughout those 2 years, plus the 800 meters, around 27,900 meters. So just shy of 28,000 meters. And yet it's so consistent. The mineralization is high enough grade and right at surface that we were able to put together that resource and with the majority of the ounces already reporting as indicated as opposed to inferred. And so, that was an exceptional start. And you look back at some pretty exciting deposits throughout Canada and even globally. It's rare not only to come out with a resource of that scale so quickly, but even just to come out with an initial resource at that scale. So, Valley is unique in a lot of ways, and we were pretty happy to be able to put that out there so quickly.
So a couple tables that we should focus on. One I want to focus on, well, I guess it's figure one and table one, the allocation of ounces. We can see that there's a lot of ounces here, 3 million ounces, almost 3 million ounces in indicated and inferred between the surface and shell one. Again, figure one, table one, break this down. Is this essentially saying that the high grade aspect of this resource is pretty much right at surface?
Yeah, that's it. That's exactly what it's saying. You see a lot of projects and deposits where, they have a good thing going, but they're still looking for that high grade starter pit. They're still looking for something that's going to quickly pay back their capex. This is pretty much a dream scenario in terms of what you'd want to find. And so, yeah, looking at that shell one, as you mentioned, over 2 million ounces indicated at 2.45 grams per ton. So this is high grade for a reduced intrusion related gold system. You're typically looking at grades, high is a gram per ton, and typical is like a half gram or, 0.65, that kind of a thing, sometimes even lower. And so to have, multiples of that is fantastic. And then the additional 900,000 ounces inferred. So like you say, in all categories, close to 3 million ounces there, 2.9 million ounces. And again, at high grade, 2.16 for the inferred. And the other thing to point out is just the waste material. It's not normally reported in a resource, but it's important. I mean, it's a big part of what that resource actually is. And so in that first shell, you're basically just mining mineralization and that multiple gram per ton mineralization with almost nothing that isn't. So if you were to convert that to a strip ratio, it's not quite a strip ratio yet because it's not a proper pit design. This is just some basic optimized curves or optimized shells to potentially, take out the resource, but without looking at the details that you need for calling it a strip ratio. But anyway, it's 0.08 to 1, the ratio of that waste to mineralization. So yeah, you talk about deposits with like a 2-to-1 strip ratio or even a 6-to-1 strip ratio. I think global average right now is like 4-to-1 for open pit gold projects. And so yeah, 8-to-1 is obviously phenomenal. And the fact that it's very high grade in that starter area is fantastic as well. And even just kind of stepping out from that, at the bottom of table 1, you can see the mineral resource total. And so this, again, this is a recap, obviously, of the year. This is in the technical report. It was in the news release at the time, but I think it's worth looking. So, you look at that waste to resource ratio in that bottom table, and you're still at 0.9 to 1. So you're still sub 1 to 1. And that's kind of summing together all 4 of these different pit shells. These aren't different mine phases or anything like that. We just wanted to highlight that, to take that figure, that bold figure of mineral resource total, those numbers in that bottom row, those are great. We're very happy with that, but they're not just any deposit with those numbers. And, we wanted to really kind of accordion it out so people could see just how special it is to be able to start mining that material so quickly. And you have to make assumptions and to produce a resource estimate just to get a realistic cutoff grade. And I think we were pretty conservative across the board in how we approached this. Like, we didn't cut corners with costs. And we also didn't push, like, the revenue factor is something that isn't really in the normal vocabulary, I guess, for resource investors necessarily. But generally, resources are pushed out to revenue factor 1. We thought that would just pull in a lot of places where, because we've done so little drilling, we didn't know a lot of we would just be pulling in unknown material and classifying it as waste and kind of masking a lot of the deposits. We really tried to choose a more reserve-like methodology in terms of, like, looking at potential cost curves and figuring out, okay, what's an optimal point of where you'd actually want to build this thing, given what we know. And of course, we've done a lot more drilling this year, and hopefully we build things out from there. But this revenue factor 0.72 is actually leaving things on the table and is quite conservative. So we can stand behind this pretty strongly. And yeah, it basically uses a single shovel operation, like 25,000 tons per day. And that works out to about 9 million, just over 9 million tons a year. And so if you look at those tonnages that you're cutting through, and again, like in that surface to shell 1, you're not digging through other mineralization that's not mineralized. And so that 25,000 tons a day is basically 25,000 tons of ore per day. And you wouldn't have to go to something else until you get into these later stages where you're actually pulling waste material out of the pit. But that 9 million tons per day using those tonnages, that works out to almost 4.5 years of production. From that, you'd basically be pulling out an average of like 690,000 ounces per year over those first 4.5 years. So again, this is not a PEA. This is not any kind of economic analysis. This is just kind of like looking at, what is this with the assumptions made in the resource? What does that mean? And so, it's a phenomenal way to start an operation. We'll see, is 25,000 tons the right number? Who knows? We have a lot of work to do to dial that in and to figure it out. And so, how it all come together, like those numbers are really just illustrative, more qualitative than anything. But like, it's a significant discovery, a significant deposit, and we couldn't be happier than putting that on the table for the world to see.
I'm sure you're also getting bugged for putting some economics around this too. But hey, something we'll talk about next year is an updated resource. One other figure I want you to explain is figure 2. It's right below table 1, and it's a histogram that essentially breaks down the contained gold by 20-meter elevations. Can you explain what you're showing in this figure, please?
Yeah, so one thing that gets lost in the cross section, or I guess it's the long section on figure 1, is that the higher grades mean more gold, and that sounds kind of obvious, but visually it's not always obvious. It's just like, okay, there's a higher better numbers here, but the fact that you have all that high grade means that you have literally just more gold in that volume of space. And so this kind of illustrates it a bit better to just show how close to surface this deposit really is. And you can see the numbers there, they almost correlate to what I was talking about in terms of possible production from a 25,000 ton per day mill kind of scenario at Valley. And really, again, just like the production levels, like this all has to be optimized and figured out. But it's a fun exercise just throwing these things at it. So say if you're doing 20-meter benches, you're basically pulling through like almost a year's worth of output in those early stages per bench. And so, every year you mine another 20 meters and you get another basically significant amount of gold out of there. And so the fact that it starts at surface, it just means that you turn this on and you go, and the potential, what you can support with a mine like this, like, the kind of capex you can pay down quickly and so on, is substantial. Like it's exactly what you want to see. That front heavy, it makes you discount your cash flows less. You pay off your debts more quickly. It makes for a very robust and flexible sort of an operation.
All right, that takes us through that initial resource. We'll talk a little bit later about next year, an updated resource, or I guess this year, an updated resource from 2025. Let's talk about this category that says operational excellence, talking about the drilling. You completed over 35,000 meters of drilling. This was your largest campaign to date by the company. Talk to us about what you drilled. Just give us another little recap of all the drilling that happened in 2024.
Yeah, no, it was a fantastic year. I think, last year I think we drilled about 22,000 meters, which was then by far our largest campaign to date. So obviously blew that out of the water this year. We had 5 drills going out there. For most of the season, that was 3 at Valley and 2 exploring regional targets. And yeah, we kind of set out, okay, 5 drills, 5,000 meters of drill over the season. We'll probably be able to do about 25,000 meters this year. And so, yeah, just the efficiencies of having this second camp at our Valley target, pretty much right next to the target, and expanding our capacity, allowing us to do things more cheaply, really got us a lot more meters than we were expecting. So that was fantastic. So we drilled 25,000 meters at Valley. And again, if you recall, it was just shy of 28,000 that we based the resource around. So we've almost doubled the amount of drilling on Valley. That's a combination of infill, trying to get those inferred ounces up into indicated, but also expansion. There's some big open edges to the system. Some of those that we've been exploring, and we've talked about that a bit in some of the releases that we've been seeing. And we're still waiting for about a third of the assays from Valley. So, we're hoping to have those out in the fairly soon in the new year. And that's 20 more holes. So there's a lot left to come there. And we drilled regional targets as well, 6 different targets, and, some strong results from Jupiter on some early step outs there, testing some other conceptual ideas and really kind of trying to pin down more of this mineralization. We see the pathfinders for it. We see the fingerprints of it all over. And we're finding, reduced intrusion related gold systems separate from Valley, but all through this district that are throwing off mineralization, throwing off big geochemical anomalies. And so, we're trying to use Valley as Rosetta Stone, and hopefully we can get into the heart of some of these other systems and find that high grade. We still have results outstanding, I think about 3,300 meters, again, around a third of the that 10,000 meters that we did on other targets outstanding, and that's from the Aurelius target and from the remaining holes from Jupiter.
Now, in some of these other highlights, we'll tie those in too with some of those results from Valley. Just again, highlight that visible gold component and some of the highlights from from 2024's drilling, please.
Yeah, I mean, that's the, one of the exciting things about drilling Valley is it's almost like a base metals deposit in that you drill it, you see you're drilling through granodiorite where most of the mineralization is hosted. It's fairly boring, it's granodiorite, it's like a countertop. Except it's exciting because it has all these quartz veins through it. And so you can tell by the density of the veins, at least if you're into something potentially interesting or not. But you can actually see the visible gold in so many of these veins. It's not 1-to-1, but we've seen thousands now of instances of visible gold. We have individual holes with hundreds of instances of it. And overall, we've drilled now 53 kilometers, so 53,000 meters into Valley since those first holes in 2021. And on average, we've hit a vein bearing visible gold every 7.2 meters. So, that's just phenomenal. It's a very consistent, very robust deposit. And it really does work to our advantage when you can get a qualitative sense anyway, of whether you're in a good part of the system or not, just as you see the core come off the drill. Obviously you need to wait for the assays to get too quantitative about it. But yeah, you get a general sense of things just looking at the core right the moment it comes out of the ground.
All right, let's also talk about this environmental stewardship. The company received an award in 2024. Talk to us about this award and, again, your work within the communities within the Yukon.
Yeah, I mean, so from the beginning, from the inception of Snowline, we wanted to build a company that really is principles based and works hard, with that in our DNA. And so, it's in our deck, just as it's in everyone's deck, this, I guess some would call it the ESG slide and so on. But, for us, it's more than that. It's really a code that we live by and frame decisions around. And, so environmental respect, building community, going big, which is basically looking for big systems like Valley, and then doing things the right way, operating at a high standard, operating with integrity. We really try to hold ourselves to these to the utmost degree. And so, we look for things. We look at on the environmental fronts, like how can we leave things better than we found them? And, that can be a challenging question to answer when you're operating in a place that just hasn't really seen much exploration before. We found different ways to do it every year. And in 2024, we were looking just kind of regionally, even off our claims. And we've used a staging area. There's an airstrip to our southwest called Plata. It's at the end of the Plata Winter Trail, which connects to the North Canal Road, which is also a very likely infrastructure corridor for Valley. And so we were looking at that, and I was actually weathered in there for a few hours this summer with some of the team. And, we were looking at all the things around there. And yeah, it's being used in different areas, and things have been left behind there. And, we just saw an opportunity to kind of rectify that and clean up this old, essentially industrial site. So we've done what we can, flown out a whole bunch of the materials and stockpiled the rest. And the phase 2 of that cleanup will be using the Plata Winter Trail to haul all of that out and dispose of it properly. So, it's great to be able to do that program. And of course, we're very happy for the recognition on that front as well. And then on that building community front, I think that there's some overlap there as well. And, being just based here in the Yukon, I live here. And, I want to build a company that's good for the territory. I want to build a company that a lot of the benefits from the actual operation, from the discovery and so on, flow through to the Yukon. I think that's the way it should be anywhere. And so, I'm pretty happy to look at the numbers as the dust settled this year. And 80% of our exploration expenditures on third parties, contractors, and so on was spent on Yukon companies. So that's huge. It was a over $30 million program. And yeah, so, that money is staying in the territory. And within that, well, actually, that basically 61% of that same amount was with companies that are either owned by or partnered with First Nations, that especially the affected First Nations or the traditional territories that were on or near. And so, so it's great to be able to contribute kind of on both fronts and to be able to make a difference, even as an exploration stage company. So very happy to, that we're living up to the principles that we've set forth for ourselves in launching the company.
So, Scott, I always get emailed this question, or at least a request to ask this question when I do talk to companies active in the Yukon. 2024, there was a big negative story, actually, from Victoria Gold, their issues at their mine, and then the government taking that mine away. What can you tell us about what Snowline is doing to continue to help out the community further, and also any impacts it could have in 2025 for you?
Yeah, well, I think like a lot of the community, like the mining community in the Yukon, we're here to do what we can to help out, and not just in the Yukon. I think other companies have even reached into the Yukon to to see where they can help out. Like it's something that nobody wanted to see. It's on any side of the equation, and it's something that hurts the industry, not just in the Yukon, but nationally and even globally. It's something that people can point to as another risk of mining. Of course, there are risks to mining, but it's something that we have to do. And yeah, but there have been some silver linings that have come out of it, if you could call it that. It has really emphasized how important mining is to the Yukon and to various groups within the Yukon. It really is our economic backbone. I think that just Eagle alone, is the biggest mine in the history of the Yukon, and hopefully it'll come back and get going again. But it's not a huge mine in the grand scheme of things. I think they were ramping up towards around 200,000 ounces per year production. So it's certainly significant, but not, it's not the behemoth out there on a global scale. And yet, nonetheless, it was 12% of the Yukon's GDP directly. And, a lot more than that if you look at the sort of knock-on effects of those contributions. And so the Yukon is feeling the absence of that. Government budgets have been cut back. Teachers' discretionary spending has been cut back. We're having fewer and emptier flights in and out of the territory, which kind of affects everybody's quality of life up here. And yeah, so it's definitely been eye-opening. And you see that, unfortunately, we've had a sort of a string of unfortunate, I guess, outcomes of a few operations over the past, call it decade and a half or so in the Yukon. But that I think it really reinforces the need in the Yukon, not only for, another mine to go forward, but for a really high quality project, and I would even volunteer that Valley has some of those attributes, as we discussed earlier, that, we need something that really works, where the rubber hits the road and you just have something very robust and reliable, and that, pays things down very quickly, and that it can afford to do things at a very high standard. And then, even hopefully reducing the likelihood that anything happens, and were anything to happen, that has the the legs to push it through with confidence and to correct anything that could happen out there. So I think that in the sort of medium or even near term now, I think we're pretty well positioned to keep pushing things ahead. As heap leach failure, we're looking at at least our resource focuses on a mill scenario, but we're, as you mentioned, we're not quite at the economic assessment just yet and dialing in what would happen. But certainly, this is, you'd be leaving a lot on the table, just heap leaching, especially in this high grade core. So yeah, there are a lot of differences. And it's been interesting to see the vocal support of First Nations for other mining projects, specifically, to the south of National Dun traditional territory, which is where we operate, which is where the Eagle mine was. You have the Selkirk First Nation looking to buy the Minto mine, which shut down a couple of years ago now. And so, no buyer stepped in for that project. And yet it was important enough to the First Nation that they want to see it come together, even if it means doing it themselves. And at the same time, the Toronto Quichin put out a release basically expressing support and concern for the incident in National Dun traditional territory, of course, but also saying that, coffee in their traditional territory is a heap leach project, and that they've reviewed the plans again, and they've talked to Newmont and they're comfortable with it. So clearly they're saying that, okay, heap leach can be done correctly, and we don't want to lose this mine. This is an important part of our economic future, and so let's not just let's not throw the baby out with the bathwater here. And yeah, even the National Dun have been, I think it's completely understandable in terms of saying they want to understand what happened here and ensure that it doesn't happen again. But they've also been pretty consistent in their messaging that they're not opposed to responsible development. They recognize that mining is, it's a part of their history and a part of their future. It's an important economic arm throughout the Yukon. And so, I don't think they're not looking to lose that. And so, I think there are kind of tough conversations to be had all the way around, but everyone in the Yukon has kind of come out of this recognizing the importance of mining. And I shouldn't say everyone in the Yukon, of course, every population has its bell curves, but nonetheless, it's something we're getting through. And on the timelines that we're talking about with Valley, I think it just puts us in a position to move things ahead and hopefully build the kind of mine that the Yukon deserves.
Okay, thanks for addressing that, Scott. Let's also talk about the financial strength of the company. The news release outlines that company has over $42 million Canadian in the treasury at the end of 2024. Can you talk to us about the institutional ownership? I know that's a key driver for this company when you get to this sort of scale and this market cap. What did you see in 2024 in terms of institutions coming in and supportive shareholder base?
Yeah, we've been seeing some big names step into the story, and so that's been really great to see. There are groups that have held positions like 1832. I think they're now Scotia Asset Management. Groups like T. Rowe Price. They've been building large multi-percent positions in the company and that have been taking advantage of this. I've had several groups reach out to me, especially when following the Eagle Mine slide, basically saying that this is wonderful, not the incident by any stretch, but Snowline stock performance that is just on sale, and we're here, we're buyers, and certainly huge volumes traded hands there. And I think a lot of people who were looking for a starter position got it there. But even, later in the year, we've been kind of fixed in this range, I think in part because of that incident, or maybe in whole because of that incident for the year. And a lot of institutions seem to be seeing that as a buying opportunity. And, some big new positions have been opened up just in the past couple of months on the back of some of the marketing we've been doing and some of the conversations we've been having. So I think that, getting that resource out there, de-risking the project, and, doing what we've done since that resource came out back in June, I think has gotten the project to a point where it's de-risked enough for a lot of big players to step in and start taking those big positions that can really be meaningful for a stock at this level. And there's clearly a lot of upside. This is a rare discovery, and we're hoping to attract more names into the story. And of course, it's still, I think, should be pretty exciting to retail. We have sort of the foundation of a developer with this fantastic asset, but this was really the first kick of the can, maybe the second if you count Jupiter, in what we launched the company around as a district. And so, we still have that upside, that torquiness of an explorer, because, if we can show that Valley isn't just sitting alone out there, that, that obviously the geological conditions were right to create something like Valley because it exists. So, what's in the head frame, like in the shadow of the head frame here, so to speak, what else is out there in this district? And, if we can start to connect on even one more of these, but even multiple more of them, that would be game changing altogether and, would really break things open potentially. So that's still on the docket. That regional exploration, we have a big pipeline of targets, new ones coming in with every time we go out to a new area, they're finding interesting new zones of mineralization. It's an exciting place to be exploring, and yeah, certainly both institutions and others are waking up to it. And I think as we progress things further, updating the mineral resource, eventually getting to economic assessment, we kind of remove barriers to more and more groups that could potentially invest in this kind of a thing. And so I think there's a solid hill to climb in terms of value generation and on Valley alone. But then there's that wild card in there. If we can really show that this is the district that we think it is, then that'd be a pretty exciting place to be.
Okay, Scott, I think that wraps this up quite nicely. Look, there's another key highlight in that news release that talks about new team members that came into the company. I'll let all my listeners read over that point as I will post a link to the news release. And yes, next year you outline some of the things that are coming, and that is an updated resource, more drilling, undoubtedly with that cash in the bank, and the results that are still to come from Valley and from some of these other regional targets. So everyone listening, be sure to click that link, read over that full news release, and send me any further questions you have for Scott, and I'll get him to address those throughout this year. Scott, thank you very much for joining me early on this year. I will follow up with you as more drill results are announced and to answer any questions. Thanks again for your time today, Scott.
Yeah, thank you, Corey.